Let's start with the Bloomberg Dollar Spot Index, highest since February. The lower chart is as interesting. The RSI at 80. What's sustaining the dollar's gains at these overbought levels?
Well, you know, we have expectations for the Federal Reserve to raise rates in December. That's basically sustaining the rally that we've seen since the election. We're at around 96% now. So to the markets, that's almost a done deal. And that's just keeping up this momentum that we've seen in the last 2 weeks. And until we see what the Fed does in December, that's likely to continue.
Yeah, we've had comments from various Fed officials. The nuances matter, don't they?
Yes, indeed, because they have affirmed the possibility of a December Fed rate hike, that's for sure. And that's already priced in the market, as we can see. But we also have to watch out for what they say in between the lines. For instance, today we had Dallas Fed President Kaplan saying that the Fed is ready to remove some accommodation, but at the same time, they're also watching the level of the dollar, which, as we can see in our charts, is at the highest since February. So that's not something that they want to do too quickly then, if that's the case. We also have Yellen saying that even if they start normalizing policy, it will be at a gradual pace. So these are the things that could let the dollar rally that we're seeing right now take a bit of a breather.
And Christine, the emerging market currencies are having an even harder time of it at the moment. We saw the Mexican Central Bank raise by 50 basis points yesterday, and it barely impacted the peso weakness. And if you look at the Turkish lira, we have looked at, what is it, 30 big figures, 20 big figures in the last couple of weeks since the election. So what's going on with emerging markets, and how can their central banks help out?
Well, it really is all because of the dollar rally that we've seen. And as we know, because of the dollar and its connections to the rest of the world, it's likely that the rest of the world's currency markets are likely to get swept up in that. And so it really depends on how much capacity these central banks have to shore up their own currencies, but also whether they want to fight this dollar rally that we're seeing right now, because there's a kind of a trade-off between their ability to do it, but also that realization that they are very much going to be going against the rally if they do it.
Right, and who of them has the reserves necessary? Who's intervened already?
Well, we've seen central banks in Malaysia, India, and Brazil step into the markets and shore up their currencies this week. Of course, we know other big central banks, such as the ones in China, for instance, are constantly watching the markets. So it really depends on the pace of declines in these currencies, because we all know that central bankers don't like disorderly markets, and they're definitely going to be watching out for how quickly these moves are happening and what they're going to do after that.
Meanwhile, the bond markets, I mean, it's quite astonishing, isn't it? Worst 2-week performance for our global bond index in, a quarter century. And I think this is my favorite bond chart of the week, Christine. This is the spread between the German and the US 10-year, which, right now it's 2%, widest since 1989, since before Vonnie was born. This is a long time ago, Christine. Is this reflecting the divergence between the ECB, we can throw in the BOJ, and the Fed right now?
Absolutely, Mark, because, we have the Federal Reserve talking about normalizing policy. They're really the only major central bank doing that right now. We have the ECB, as you mentioned, and the BOJ still very much in easing mode. And in fact, we've seen the BOJ, for instance, fire a warning shot to the bond markets this week and signaling that they're ready to buy unlimited amounts of bonds to sustain their target. As you mentioned earlier in the program as well, Draghi came out a little bit dovish and said that the recovery is still dependent on ECB policy. So both of these central banks are very much still.
Which is a beautiful seg to the euro, really quickly. This is euro falling for the 10th consecutive day. Worst stretch, as we know, Christine, since its inception, its introduction in 1999. It's oversold. It's the inverse of the dollar spot index. We were talking in the break. 105 is important, isn't it? Because 105 was the low from March last year, just when the ECB started its bond buying program. Who are you talking to to about parity. I mean, how soon could parity happen?
Well, no one knows for sure, of course, but we've seen forecasts for parity in the early part of next year that's possible. And, you know, at this point, it really depends on the momentum of the euro, of course, but more importantly, the dollar as well.
And what the ECB does in December too. It's not just about the Fed, is it?
Of course, yes. And, you know, we'll be watching out for any comments on the quantitative easing program. We know that in October, Draghi reiterated that there was not going to be any abrupt end to the program. In fact, they're going to keep continuing accommodations. So any comments to that front would be very important.